Well, thank you very much. Everyone seems to be able to hear us loud and clear, so we'll proceed with today's webinar. And thank you to all our participants and our panelists joining us today. Here at CDSB, we're thrilled to announce the launch of our climate-related financial disclosure e-learning courses on the TCFD Knowledge Hub. So as I mentioned, CDSB has launched these courses and the aim of these courses is to drive knowledge around the recommendations of the TCFD and ensure that everyone is sufficiently educated to drive uptake of those recommendations and facilitate higher quality and enhanced disclosures. So I would like to introduce you to our presenters. Gemma Collins is Project Manager here at CDSB. She joined us in 2016 to support CDSB's technical work. And after working as an environmental educator for over 4 years in London, she completed her Masters in Environment and Development from the London School of Economics and Political Sciences and joined us to manage the TCFD Knowledge Hub and lead on the Beyond Disclosure programme. We also have Joe Paisley, who is the co-president at the GARP Risk Institute, and that's the thought leadership arm of the Global Association of Risk Professionals. Joe's career began at the Bank of England, where she worked in various economist roles. She left the bank in 2015 and joined HSBC as their global head of stress testing, where she was responsible for ensuring that they met all their regulatory stress testing requirements around the world. So I think it's safe to say that we're in very capable hands today. And now I will hand you over to our experts who will lead you through this webinar. Over to you, Gemma.
Thank you, Leslie. And I am really thrilled to be speaking to you today and to introduce the online courses for climate-related financial disclosure. For those of you who don't know very much about CDSB, we are the Climate Disclosure Standards Board, and we are a consortium of 9 environmental and business NGOs. You can see our board there on the screen, and they include the World Economic Forum, CDP and SASB. We also have a technical working group of over 40 experts who help drive our technical content, and there are some examples on the screen of those in our technical working group. We were set up at the World Economic Forum in 2007 with a mission to create the enabling conditions for material climate change and natural capital information to be integrated into the mainstream reports. And we achieve our mission by offering a framework for reporting environmental and climate change information. Next slide, please. Thank you. So our framework, the CDSB framework, was developed in line with international accounting standards. It was updated in 2018, and it includes 7 guiding principles, 12 reporting requirements, and is now fully aligned with the TCFD recommendations. Even before we aligned with the fully aligned with the TCFD, if you were to look through our framework, you'll notice a lot of synergies between what the CDSB framework says and what the TCFD recommendations say, and we are the most referenced framework in their final recommendations. We're also complementary to other existing reporting provisions such as CDP, GRI and SASB, which I know a lot of organisations also report to, and we are referenced in the EU Non-Financial Reporting Directive as well as other stock exchanges and regulatory guidance. Now, I'm pretty sure that everybody on this call knows who the TCFD are, but again, just to kind of give us a bit of context, I'm going to introduce who they are. So in 2015, the G20 Financial Stability Board set up the Task Force for Climate-Related Financial Disclosures. In fact, there's Task Force on Climate-Related Financial Disclosures. And their final recommendations were published back in 2017. These recommendations are voluntary and they focus very much on climate-related financial disclosures in annual financial filings. They focus on specific industry groups. So they have the financial sector, which includes banks, insurers, asset managers and asset owners. But they also specifically look at high-risk non-financial sectors, including those within the energy, transport, materials and building and agricultural sector. On the screen, you can see those concentric circles, and those are the four core pillars, the four core elements of the TCFD: governance, strategy, risk management, metrics and targets. Now, they're presented in this way because the recommendations are designed to be interconnected, so that you are disclosing material information that describes what's going on within your organisation. Next slide, please. Now, for those of you who have joined CDSB for webinars before, you've probably seen this graph plenty of times, because we do like to pull it up and talk about the implementation path. So we're now 2 years on from when the TCFD released their final recommendations. So ideally, we should be at the third box where it says organisations begin to disclose in financial filings. And we're certainly seeing that there are quite a few organisations who are either starting to disclose their information here or are working towards this. But we are still seeing a lot of organisations still hovering around that first pillar, where they are reporting climate change information against other frameworks and in other places, and starting to bring that together and look at how they can implement the TCFD recommendations fully. Next slide, please. So earlier this year, in June of this year, the task force released their second status report, and their last count, as far as I am aware, they have 825 supporters globally, making up a market capitalization of more than $9 trillion. And within this status report, they did a few surveys and research into the way in which companies are disclosing information. And in particular, they looked at how reporting has evolved over the last 3 years. Now, the status report tells us that despite the fact that there are so many organisations supporting the TCFD, and that number has increased quite substantially over the last year, there are still a lot of companies that are finding it challenging to implement the recommendations, which is resulting in insufficient disclosure. So more clarity is needed broadly on the potential financial impact of climate change. The majority of companies do not disclose information on resilience, and resilience is kind of focused around the scenario analysis piece. And finally, mainstreaming climate-related issues requires the involvement of multiple functions. So we know that there's a lot going on behind the scenes in companies, that they are talking to various people. But in order to get that into disclosure, there's still a bit of work that needs to be done. And that leads us quite nicely onto the e-learning platform and the courses that we've developed that have been launched today. So here you can see a quote from Nora Shapiro, who's Special Advisor to the TCFD and also is Vice Chair for Global Public Policy at Bloomberg. And she says that the new e-learning courses on the TCFD Knowledge Hub offer organisations an effective and convenient tool to further their understanding of the financial impact of climate-related risks and help them take steps to integrate such disclosures into their reporting process. And that is one of our key aims.
Thank you very much, Gemma. And I just want to say, before we step through the courses in more detail, this is all about learning. So we do encourage all our participants to get involved. Drop your questions into the Q&A or the chat function on the right-hand side. We've already had some come through. So at the end of the webinar, we will have dedicated time for Q&A with our experts. So I'll hand you back to Gemma now. And as I say, please do drop your questions and we'll collate them as we go through.
Thank you, Leslie. So the courses that are live now, we've already seen some people registering this morning, so it's great to see that it's already hopefully a useful and well-needed resource. But the aims of the course and kind of the context, the reason behind why we started it is that the status report, as I've mentioned, essentially is saying that more needs to be done. Only a small percent of the companies disclosed against all of the recommendations. In fact, I think the number is, on average, only 3.6 of the 11 recommendations are being disclosed. So there is a gap that needs to be filled, and we need to increase that number. This time last year as well, HSBC Global ESG found that only 8% of issuers and 10% of investors that they surveyed from around the world had even heard of the TCFD. So again, clearly there is some more education that needs to be done here. There is also a lot of confusion. We hear all the time here at CDSB about what the landscape of reporting is, the fact that there's a lot of standards and frameworks and initiatives that are working towards the same goal, but because there is so many of them, it can be quite overwhelming for those relatively new to this field. So one of the elements that we look at and we're trying to address is kind of giving users that foundational information to be able to cut through all of the landscape and figure out what's the best way of reporting for them. So the e-learning platform is hosted on the TCFD Knowledge Hub. I hope that loads of you have already been on the TCFD Knowledge Hub and have been able to search around and find the resources that you need. The Knowledge Hub we launched last year with the aim to have a singular place where all of the resources and information that one may need to help them on their journey to disclosing the recommendations, all in this kind of one place. So on the Knowledge Hub, we have a database of resources. We have a huge amount of resources because climate-related financial disclosure and climate-related disclosure does cover a huge amount of detailed topics and themes. So we have a searchable database that you can filter and find relevant resources for yourself. We also very much welcome you to contribute your resources or any resources that you have found particularly helpful. We have a handful of case studies, and we're developing more case studies as we go of organisations who have or are currently in the process of implementing the recommendations to kind of get a sense of what they're doing and to have an element of peer-to-peer learning. We have a couple of pages on an introduction to the TCFD. So we talk about who they are, why they're here, some of the nuances to the recommendations. And we also have a dedicated page just on scenario analysis because we know that a lot of organisations find it difficult to start. So it's a place where you can go when you want to start. And then moving on to the online courses. So these courses are self-paced. So you can go in and complete the lessons at your own pace, and if you are unable to complete them in one go, you are able to save your progress and come back. And the lessons include plenty of activities and quizzes to help you actively engage with the content. We've also interviewed a number of experts, and kind of they give us an insight into various elements of climate disclosure. And I know this word, the next word, is kind of going to scare a few people, but there is an exam for each of the courses. It's not a particularly difficult exam if you've gone through the lessons. We're just testing that you've been able to collect the information that we think is necessary. And there is also a forum for discussion. So as the platform develops further, there'll be a place for you to go and to speak to others in this field who potentially are having the same challenges or have solutions that you hadn't thought of, again, to kind of establish a community around disclosure. And once you've completed all of the elements, you do receive a certificate of completion, so you can put that into your database. So I'm just going to give you a quick overview of the courses that are currently on there. Today we launch with 3 courses, 3 foundational courses. The first one is an introduction to climate-related disclosures, and this is essentially a 101 of climate disclosure. So we look at what the drivers for reporting are, and we take a look at the way in which reporting has evolved over the years, starting with financial reporting, and then how sustainability reporting and climate disclosure has kind of come into that field. We also then tackle some of the key concepts and some of the challenging concepts. For example, we look very briefly at materiality and the concept of forward-looking disclosure, what that means, what the challenges are, and how you may be able to get over some of those challenges. And we also give you an introduction to the corporate reporting landscape. It's too big to tackle in its entirety, but we do kind of lay the foundation so that you can navigate that landscape as you work through. The second course is completely dedicated to the TCFD and their recommendations. So we break down the 4 core elements, the key principles, and the 11 recommended disclosures of the TCFD, and kind of explain what they are and what you may be expected to disclose against them. We also provide some examples of companies who have started disclosing, and we challenge you by asking you some questions about how you think that they have, what elements of the TCFD you think they have disclosed. And then finally, course 3 is called Embedding Climate Change into Financial Management. And this course is very specifically designed for accountants. We've worked very closely with some international accounting bodies in order to build the content for this course. And it looks very specifically at what the role of accountants are, especially in identifying, measuring and managing climate-related risks and opportunities, and then how that's embedded within financial management and strategic planning. And we also look at where existing accounting practice can be adapted or tweaked in order to encompass climate change. Now, as I said earlier, we have a number of videos from some leading experts in this field, and we also have a number of experts helping us in the development of the content itself. So you can see up on the board all the people that we've worked with. Joe at the GARP Risk Institute was one of the people, so do join the courses and you can watch a video of Joe giving us an insight into some of the elements, which I'm sure she'll be telling us later in this webinar as well. And I just want to take this opportunity to say thank you to all of these people. Climate disclosure can be quite complex if you want it to be, but when you break down the information into easily manageable chunks and kind of get the experts to describe it to you, it's not as complicated as one would think. So the idea was we were going to give you a quick demonstration of the Learning Hub. However, at the risk of technology failing us, which inevitably it does, we've just got some screenshots here of the hub. You can, if you want to go across after this webinar and take a look yourself and have a good explore, the website is learn.tcfdhub.org. I will have that on the slides in a second. But this is the homepage of the dashboard when you first log on. So you will able to select through the library of courses. At the end of this section, I will tell you about a few new courses that we're going to be developing soon. You're also able to earn some badges of success once you've completed various lessons and various activities. And once you go into the courses, you'll see there what the learning objectives and outcomes are, and you'll be able to measure your success through those objectives and outcomes. You'll also be able to keep track of the completed task. So as you go through the lesson, it automatically records once you've finished that task. When you work your way through the lessons, you'll find interactive slides and information which include these quizzes and activities, and you just need to work your way through each of them. And as you can see there, this is where the videos sit. So we have some great quotes and some videos drawing on a lot of the expertise that already exists. And this here is the dreaded exam. So we ask for a 70% pass rate. And as I said, once you've gone through the lessons, this shouldn't be too difficult a task. So what's next? We encourage you all to go and register. Take a look around the site, see if there are any of the courses that you think are going to be particularly helpful, and then enroll in the courses and get learning. It's September, we've already got loads of children back at school now, and it's time for us to get back to school. We also have some new courses coming within the next year, so in particular we're going to be looking at courses specifically related to governance, risk management, and then later in the year, or potentially into next year, we're going to be looking at how we can expand out into water and biodiversity. And that is me.
Thank you very much, Gemma. Lots of information there. And as Gemma did say, the courses are now live. You can see the URL on the screen, learn.tcfdhub.org. They are self-paced, so please do go in, have a look, and go through them at your own pace and time. So now it is with my pleasure to introduce you to Joe Paisley from GARP Risk Management Institute. Joe will be talking about managing the financial risk from climate change and looking at how disclosures are across various sectors. I'll pass over to you now, Joe.
Thanks very much, and I'm delighted to be here today to talk about some of the work we've been doing managing the financial risks from climate change. So we just look at a bit of background here. Climate risk used to be viewed purely, well, I've described it as ESG. Maybe I ought to describe it as a corporate social responsibility issue. But I think increasingly it's seen as posing financial risks for firms. And the pressure is coming from regulators, the pressure to disclose through frameworks like the TCFD. Investors are looking for information. And of course, consumers and clients are wanting to know more about this. Within the risk management world, scenario analysis is seen as a key tool to understanding risks. And I think it's fair to say that there's a lot to do to embed this sort of thinking in business as usual risk management. One of the key challenges, of course, is it is highly uncertain, not only in terms of how the emissions pathways will evolve, but also how policymakers might change rules, how consumers might change their behaviour and their preferences. So there's a lot of things to actually think about when you're actually trying to do scenario analysis, which is, of course, one of the pillars of the TCFD framework. If we look at how, onto the next slide, how the regulatory focus has grown, and these are just a few of the very many headlines, but you can see TCFD was a key point in this timeline. I think the creation of the NGFS, the Network for Greening the Financial System, bringing together central banks and regulators, and of course has grown up to around 36 members now. That is a hugely significant change where there's a recognition that this is a global problem and it will need a global approach. And locally within the UK, the PRA is the first regulator to set out formal expectations. But any of you on the call today involved in this, you're probably feeling slightly overwhelmed, trying to just keep up with everything that's going on. I certainly do. It is quite challenging. So that's why these sorts of knowledge hubs are so valuable, where you can come and you can find out what the latest information is. If we look at our survey that we did, the reason we did the survey was partly because we needed to learn ourselves what the levels of maturity were on climate risk management. And we structured it along the same pillars that the TCFD framework has, because we knew that that was a framework that was familiar in firms. And our survey covered 27 firms. It was across financial firms, banks, asset managers, insurers, and financial market infrastructure. Pretty sizable survey. It covered $20 trillion of assets and $12 trillion of assets under management. So a pretty good sample. It's the first time we did it. We hope to repeat this next year and get a bigger sample. But this slide just gives you a flavour of some of the questions that we asked. So we did ask about governance. Is there board governance, but not just, tick the box. It's actually, have they seen papers? Have they taken decisions? There's a bit more depth there to actually find out whether there was anything lying beneath the board governance. Then we wanted to look at strategy. Had the firm actually identified any climate-related risks and opportunities? And let's not forget that although this is about risk management, there are huge opportunities. In a sense, the risk is that you miss out on some of those opportunities. How have firms actually organised their climate resources? Are they setting targets, metrics, limits? What are they for? Are they integrated? And actually, have they done any scenario analysis? Is it regular? Have they just done it occasionally? And the nature of that scenario analysis. And then we asked the firms, what have they disclosed? So I thought it might just be helpful to give you kind of a snapshot of the overview. What we did was we got all these responses and then we scored them across these different dimensions. The next slide just gives you the results. For the 27 firms, you can see that firm 1 scores pretty well in governance and strategy disclosure, and then we go all the way down to firm 27, which really is about to start on the journey. I think it's probably easier to get a sense of the range of practices if we go to the next slide, where I literally just add them up. And you can see, firm 1 is doing pretty well. I wouldn't pay too much attention between, the difference between firm 1, 2, 3, or whatever. But the point is that this was not a naming and shaming exercise remotely. This was an educational exercise for those firms taking part, because they were told where they were on this spectrum. And they can then get a sense of where they stand relative to peers and really where they need to kind of focus their attention to improve their scores. I think when we do this again next year, we need to think about whether actually the scoring needs to change, because the benchmarks ought to be rising. The standards we require of firms ought to be rising. But I mean, at the moment, I think so many firms are just beginning on this journey that I'm very keen that we get good engagement from a wider range of firms so that they can get a better sense of where they stand. Turning to the next slide, I thought I'd just pick out a few key insights that I took from the survey. I mean, beyond the very wide range of practices, many firms do have board-level governance, and indeed, that is really where you need to start. Although this is about TCFD disclosures, you can't disclose stuff if you aren't doing it. So in a sense, I'm kind of concerned with what firms are actually doing, and the disclosures come afterwards. So in my mind, it starts with the board, and the board having conversations about this and thinking strategically about how they want to embed these kind of considerations within their business. Many firms also have considered strategic climate-related risks and opportunities. Some firms have developed new products, are changing existing products, and there's quite a range of different things that are going on across different firms. In terms of the metrics that firms are using, they seem to be used for both firms' own operations and for their asset and liability management. Targets tend to be used more for firms' own operations, so it's the sort of thing where you might set a target for your own carbon emissions or your own recycling or whatever, something that relates to the way that you run your own company. And limits in the context of these financial firms tend to be used for asset and liability management. So, for example, if you're a bank, you might be limiting your exposure to fossil fuels or a particular geography or whatever that you see as high risk from a climate point of view. Out of all of these dimensions, scenario analysis is the least well-developed aspect. It's the hardest bit, I think. And having run stress testing in a major global firm, I can understand why that is the case. I think climate stress testing or scenario analysis is even more challenging in a way because you have to translate the scenarios from, say, being expressed in terms of carbon emissions or whatever into variables that are relevant to your firm. And also, these are playing out over many, many years. So it's a journey for firms to go on. I think the better firms are more aware of the distance they need to travel, and disclosures are certainly a work in progress. I thought it might just be helpful to just pick up on those last 2 points in a little bit more detail. If we go to the next slide, it picks out a question that we asked firms about how did they describe their organisation's current approach to climate-related risk, and that's in green, and then what do they aspire to have in the future. And we use the 3 categories that the PRA uses. So responsible is an approach driven primarily by a corporate social responsibility focus. It's very much to do with reputational risks. Responsive, a bit more mature, climate change is used as a financial risk, but it's a kind of relatively narrow short-term perspective. And strategic is the most comprehensive of these approaches, where firms are taking a longer-term view of financial risks with full board engagement. And that's where the PRA expects all financial firms to get to. And I think that's probably where most firms would want to be. So if you look at this, you can see that just over half of our respondents describe their approach to climate-related risks as strategic, but more than 95% of the firms aim to have a strategic approach in the future. What I found particularly interesting was when you looked in detail at the responses of the firms that currently describe themselves as strategic, some of those firms were actually doing far less than some of the firms that describe themselves as responsive or responsible. And I found this quite curious. And I think the way I interpret this is that if you haven't started doing any work in this area, you don't know what you don't know. You don't know how much you need to do. And the firms that have started on this, I think they're a little bit more humble and they realise that actually this is probably going to be 5 to 10 years of transformation, of embedding it in everything they do. So there's a little bit of a disconnect with the way that firms describe themselves and their actual capability. And so I suppose one of the messages today is that actually everybody is on a journey. You just need to start on that, and you will get better in time. But you're also going to realise just how far you need to go. The next slide shows the maturity on disclosures, which I thought would be of interest to this audience. Most of the firms, or 18 of them, do publish information on the governance side, slightly fewer on strategy and risk management. But if you look at the number that think that their disclosures currently meet TCFD standards, that's far lower. But more firms are working to meet TCFD standards, particularly for risk management for some reason. So I think, again, there's a level of maturity here. But I think TCFD is increasingly seen as the standard framework. And of course, there is even discussion now about whether that will become mandatory, certainly in the UK. So wrapping up on the next slide, just bringing all of that together for you, I think firms, and not just financial firms, but I think all firms need to start taking climate risks seriously. And actually, of course, just to reiterate, it's not really just about climate, it is more broader sustainability issues, environmental issues, and I think that this will naturally evolve. As I said, firm self-assessments don't always connect with their true level of maturity. I think that's fine. I think that we need to just start somewhere, and that as you become more advanced, you will learn more and it will become more embedded and you'll get better at it. For all firms, whatever sector, board level governance is absolutely critical though. If you don't have the board thinking about this, then it's very difficult to bring everybody together to actually achieve what you need to achieve. The firms that I've seen that have done rather well in terms of setting their work off are ones where they brought a cross-disciplinary working group together. And that's, I think, because when you think about the changes that you need to implement in a firm to do this well, you're going to need to think about not just your disclosures, so having your finance colleagues there, you're going to have to think about risk management, you're going to have to think about how you embed it in your business strategy, in your pricing, in your HR department, your training, your culture, and possibly in your legal department as well. So bringing everybody together can be a huge way of accelerating progress and also making it more of a kind of holistic approach for a firm. The area I think needs most work is scenario analysis. I'm not surprised, that's hard. So, you just have to start somewhere really. That's like the big message. Start somewhere, start with the board, get a working group together, put some resources into it. There are huge amounts of resources out there. TCFD and the new e-learning platform, a great start, so you can start there. And there is just a little bit of a plug for GARP. We just go on to the last page. We've published just a couple of things which might be useful for those on the call today. The results of the survey in our first publication, and then we did put together a kind of introductory guide, challenges and opportunities, which gives a nice kind of little short overview of some of the things you might need to consider in terms of, embarking on this journey. So I hope that's given you a little bit of a view of the work we've done in GARP. It seems very complementary to the work that the Climate Disclosure Standards Board is doing. And at the end of the day, this is all about education and awareness and building capability, which is what GARP is very much a supporter of. So that's it for me, and I guess we've got some time for Q&A.
Thank you very much, Jo. Plenty of food for thought there. We do have lots of questions coming in, so we've got some time to take the most pressing questions. Just to confirm, the presentation will be distributed to all attendees after the webinar. So if you want to, you can share this with your colleagues or people in your network as well. We also have the information from our panelists up on the screen. So if you would like to reach out to them directly, you can do so using the email addresses. And again, to visit the TCFD Knowledge Hub, you can visit it on tcfdhub.org, and then also for the e-learning, you can visit it directly on learn.tcfdhub.org. So maybe while we're speaking about the e-learning, Gemma, we've had a couple of questions come in around the courses, so perhaps I'll direct these to you, and then we'll move over to Jo. So some of the questions, and it's probably easiest to answer these in bulk. How long do the courses take? Is there a cost, and how long does the certification last?
Thanks, Leslie. Yes. So each lesson, so the courses as a whole, we've measured them to take between an hour and a half. If you were to sit down and just do them in one go, but as I said before, they are self-paced, so you can go back and forward on the content as often as you like, and you can go away and come back and complete it at another time. In terms of the cost, they are completely free of charge. So there is no cost attached to it. All you need to do is to go on to learn.tcfdhub.org and register. We do ask you to register just so that we can monitor your progress, so that a completion certificate can be awarded to you at the end. And the certificates, so I think someone asked, how long do they last? They last forever. I think if you're an accountant or you're hoping to use these specifically for CPD credit, then they probably only account for the sort of year in which you're doing it. So I know that when we're doing this for accountants, they'll only be able to count this for this year if they complete it this year. But if not, the certificates are there forever. You can print them off and you can put them in a frame and hang it up again, top of your desk.
Excellent. Thank you very much, Gemma. And then, Joe, over to you. We've had a couple of questions come in about the survey. So, firstly, you mentioned the 27 firms. Could you clarify what geographies that you looked at?
Yeah, no, they were across all geographies, actually. Some of the firms were global. In fact, many of the firms were actually global, so they did operate across all geographies themselves, and then some were more regional, but they were fairly sizable institutions. So it's a fairly good global view, actually.
Okay, and for the for the survey next year, then, do you think you'll be increasing that or looking at the same firms again?
Well, I'd hope the same firms would sign up, but I very much want to increase the sample. Because I think that if we got a bigger sample, we'd be able then to split out, particular types of firms and do more detailed analysis. Like we might be able to look at banks versus insurance companies or whatever. So if anybody is interested, and it's a bit awkward because I haven't named the firms that took part, but I think if we got a bigger sample, it would be good to just name everybody who took part, and then firms would know whether they were in there or not. I mean, the idea is really to drive a learning across the sector so that firms know where they are, really. I think it's just useful. So, yes, I'd welcome anybody who wants to get in touch with me at theriskinstitute@gov.com, welcome to have a conversation. We have focused on financial firms so far. But I don't know, in principle, we could do this survey across non-financial firms as well. I don't see why not. So, if there's interest out there, then just get in contact and I can think about whether we do a different survey or whether we just add you to this one. I don't know. Be interested to know what people think is sensible.
Okay, thank you very much. And there you go. That's an invitation to all of you to reach out with Joe and discuss the possibility. And then we've got one other question around scenario analysis, and I feel like this always comes up. And we do get a lot of questions about it here at CDSB. But Joe, given your expertise and the fact that we've got you on the line, I'm wondering maybe if perhaps you'd like to take this question. So you've mentioned kind of from your key findings that scenario analysis was one of the least developed. What would be your advice, or do you have any tips for getting started with scenario analysis and how you can make it effective?
Yeah, that's a great question. I mean, it depends what type of firm you are, because it depends what risks are material to you. So if you think about, a bank, their risks are going to be different in nature to an asset manager, probably different to an insurance company. So there's no kind of silver bullet for all types of firms. So let's just take the example, of a bank to begin with. If you're going to start thinking about scenario analysis and you haven't really done very much at all, you've got to know what's on your balance sheet today. And so the best thing to do is really to do more of a top-down exercise, I think, looking at, say, producing a heat map or something to understand, say, your exposure to certain industries. And then you'll get sort of a sense of where your priority might be for deeper analysis. So if you're looking at transition risk in particular, you're going to be looking at high carbon emissions industries. If you're looking at physical risk, then you need to understand the physical location of your assets, if you're thinking about the actual risks to your own operations. But also, you need to be engaging with your counterparties and the people you're lending to understand how are they thinking about the physical risks affecting them, and obviously how are they thinking about transition risks. So there'll be a lot of engagement, I think, with your counterparties. If you're an asset manager, you're going to be thinking more from a, not your own balance sheet necessarily, but you're going to be thinking very carefully about ESG. What does ESG mean? What funds, if I'm labeling them as ESG, are they really ESG? What criteria am I using? So different type of approach, which you might then be thinking about different scenarios for different funds. An insurer, of course, it will be depending on what kind of insurance are they providing on their liability side and on their asset side, where have they invested their assets. So the nature of the scenario that's relevant to your firm will depend on your business model and your balance sheet. Once you know kind of what you've got on your balance sheet and what kind of risks are likely to be more material, then I think you have to think about getting a scenario, either one of the reference scenarios, or actually coming up with a scenario that's relevant to you. And there are plenty of resources out there that are useful to get you going on, say, the reference scenarios. And the firms that I've seen who've actually tried to devise their own scenarios have tended to kind of approach it from getting a bunch of people together from all around the business and getting climate experts in a working group to start thrashing through, well, why might this be a relevant scenario for our business? And there are, providers out there. You can just look on the internet. There's plenty of providers. We talk a bit about it in our Challenges and Opportunities paper. And then you have to decide, how granular do you want to go? I think there's a trade-off here. You could get very granular and certainly lose the plot pretty quickly. You could be too high level and then not get any meaningful insights. So it's getting that sweet spot. And I think you'll probably do multiple different views of it. You might want to do some sort of scenario analysis for a particular geography that you work in or that you operate in. You might be worried about a particular sector. It really does depend about what your risks are, what your most material risks are that face your firm. So unfortunately, it's quite difficult to say, this is how you do it. Here's my to-do list, and you tick this, and you're done. It does start with the board, though, and it starts with those kind of conversations. And then for finance professionals, I would really recommend getting some risk people in there to think about how to run scenarios, because that's what risk people do kind of day in, day out. So bringing together the right expertise is pretty critical on this, actually.
Thank you very much, Jo. Unfortunately, that is all that we have time for today. Thank you very much to everyone who joined us as attendees and also to our two panelists for today. As I mentioned, please do reach out to us if you have any questions. We will distribute the slides after the webinar. And everyone, go ahead, sign up for e-learning courses, and please do, read more about GARP Risks Institute's fantastic work and their findings in this space. So thank you very much to everyone, and have a lovely afternoon. Bye-bye.